Good afternoon, everyone, and thank you to Yvonne for that introduction onto stage. My name is Wade Napier. I'm the research analyst at the WPIC, and I've been afforded the wonderful opportunity to provide today closing remarks for today. I firstly want to give thanks to all the presenters and panelists today, because it is without them that a conference like this really can't be such a success. So with that, I'll sort of jump into some of the closing remarks, and I think we'll start with mining in the morning sessions. And I think we had a very fascinating discussion this morning from two very different perspectives of the mining sector. One was obviously your large established South African PGM miners, and the other perspective was your junior miners as well as potential project development operators. And I think within that discussion, two things really jumped out as me as contrasts, and one was geography and one was legacy. So I'll start with geography. It's very well understood that South Africa is home to 75% of the global PGM resource base. However, when we had a discussion with three potential projects coming online, none of those projects were in South Africa. And so the question is, why is that the case? Why is South Africa not the home for potential greenfield projects? And so we need to look at several things that explain that. When our speakers spoke, they spoke about policy certainty, but also policy support. You had governments that were open for business and were asking for project development. There were tax incentives. There was certainty about infrastructure and the likes. The second thing which differentiated some of our incumbents and potential future suppliers was energy. We spoke about high energy inflation in South Africa, and we spoke about incumbents that were sort of vertically integrating into renewable power supply. If you have to do that, that's quite a concern. And if you compare potential projects in Brazil and Australia and Zimbabwe, there's very much certainty about energy supply and also renewable energy supply. Thirdly, it's skills and labor. We know South Africa is volatile, but in Zimbabwe, there's a highly educated, highly skilled labor force. Similar in Western Australia and Brazil, you see these are sort of historically very strong mining jurisdictions, and that's quite appealing. The second thing I discussed was legacy. The incumbent SA producers have seen many PGM price cycles, and I think it was excellently encapsulated when we say sort of PGM cycles go through long winters and very short summers. And it is with this in mind that we had a far more conservative tone from our incumbent South African miners who need to balance balance sheet strength, returning capital to shareholders, and reinvesting in their businesses. And they recognize, and one of the things that they did speak about, which is exceptionally important, was that they've got the metal to supply the market. But it is very important that they have collaboration and communication with the market so that they understand what the market's needs are. And that came across as a very big contrast to the junior miners and the development projects, where you had a confidence in the project, but you had a confidence in the market. That may be naive, but that was what came across in the morning session. And just talking about the confidence in the project, it's very much a case of these projects want to be low cost, long life, bottom end of the cost curve, therefore ensuring that they are not only profitable through the cycle, but profitable through any cycle. And then in terms of confidence in the market, Jinchuan was very sort of forthright in its desire to grow its PGM production. And being China's only sort of primary PGM producer, the willingness to go abroad to get PGM raw material and sort of own that metal is quite a sort of positive reflection on how it sees the Chinese domestic demand environment looking forward, but also probably a reflection on the geopolitical uncertainty that we've certainly seen over the last couple of years, and a reflection of securing resources for the domestic market. And so if we think about that potential confidence and demand, and we sort of move to the sort of third panel discussion where there was a more broader discussion on supply-demand dynamics, I think what I particularly enjoyed about this discussion was that you actually had panelists with different viewpoints. We had some panelists thinking all 5 PGMs would be in deficit, whereas other panelists were looking for market balances or even sort of small surpluses. And the defining factors of these differences can really be encapsulated in the short term, the impact of the Iran war on automotive demand, but also the pace of recycling supply growth. But these are not only sort of short-term factors, these are actually longer-term factors as well. And I think it's well understood that automotive demand growth is going to decline. And it was very encouraging to hear the increased sort of urgency around discussions of market development and how market development is necessary to help offset some of that sort of demand headwind coming forward. And then the second factor is recycling supply. I think it's encouraging that, I think one of the descriptions that we heard today was that recycling supply is almost a symbiotic relationship of the whole value chain. And I think that's very important, and we see how it's discussed as being, more price elastic than mining. And I think, that ultimately helps to balance the market when things are overheating, but also sort of when things are cooling off, and helps to avoid, I think quite importantly, described as demand destruction. Talking of demand, we obviously moved into the afternoon with a fantastic session on demand growth opportunities in AI. And suffice to say, AI is an exciting sort of new growth vector. And we started off with a discussion on PCB, which demand growth estimates that were provided today are ranging from 8% to 17% CAGR between 2025 and 2030. But more specifically, linking that sort of AI growth into the PGM sector, there are a couple of key factors at play here. It's your iridium crucibles, which are used to sort of incubate your optical interconnector nodes, your platinum rhodium bushings, which are used in not only fiberglass but also the e-glass of your PCB boards. And additionally, there was this discussion on silicon platinum catalysts, where the silicon is used for insulation of the electronics from electromagnetic interference, heat resistance, temperature, moisture resistance, and the likes. Obviously, AI is exciting, but it would be remiss of me to not discuss the demand opportunity within investment, given our work at the World Platinum Investment Council. And this afternoon, I think what we saw was the WPIC's ongoing commitment to the physical platinum investment market, with a new strategic partnership signed today with Beijing Kashikao Department Store Co. And alongside that strategic partnership, there was a new product launch and further new product launches with some of the WPIC's existing partners in China, including Great Wall Precious Metals, Point Gold Precious Metals, and Metalor. And so I'll take this opportunity to begin my wrap-up, but I'll also take this opportunity to answer a question Beresford raised in one of the earlier panels. Beresford sort of said that his platinum market balance in 2027 would be a balanced market. And I think from the confidence that we showed that the WPIC showed in its strategic partners and launching new physical investment products, I can answer the question that Beresford, platinum investment demand should be the incremental driving force that pushes your platinum market balance in 2027 into a deficit. And alongside that, I would certainly echo some of the comments that were made yesterday with regards to investment demand, where we do see the macro environment turning towards the end of 2026, early 2027, with potentially lower interest rates that would sort of turn the momentum towards precious metals being reallocated into investment portfolios. With that, I'd like to thank everyone for their attention this afternoon. I know it's been a long day and a long couple of days, in fact. And again, I'd like to thank all the presenters of SPW 2026. I think the conference has been an outstanding success. Thanks, everyone.